Coming to you live from the palatial studios of PBJ Productions. Welcome to Patrick and BJ Talk Real Estate, where we talk about life, the universe, and everything as it relates to real estate. Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. And today we want to talk about some things that are being broadcast in the news and posted in the news.
Yeah, this one's specifically for a CBC news broadcast,
Okay.
where they talk about tax changes to impact short-term rentals. Now, we already know about there's a ban on Airbnb style real estate investments.
Yeah.
And now
The ban on using them as Airbnb unless
you fall within the rules,
there's
whatever
rules,
the rules are.
and we still don't know what those are.
Yeah. So some of the rules have already been in place, and now they're sort of they're taking away liberties that have been given by municipalities for some specific buildings. I'm not talking about, let's say, a condo or a house that's already been unauthorized use of.
Okay.
So if they're unauthorized, that's a risk that they're taking. I'm not talking about that at all.
Right.
That's a whole other can of worms
Sure.
that I don't want to get into.
Yeah.
But there has been properties that have been designated, especially downtown Victoria and some other municipalities in BC, where they've allowed that was part of the sales pitch, the incentive to buy these properties.
The Janya.
And a value of them. They had a greater value for those because you can use them like you're buying into a hotel room business. So now, with the EB government, our BC provincial government, to combat affordable housing, they've sort of they're taking away this grandfathered use.
Sure. Okay.
So they want to remove that and bring more supply on to the either condo market or rental market. Either doesn't matter how it falls,
Sure.
right?
Yeah.
Which I don't think it'll have a great effect on anything. We talked about this in other videos.
Mm-hmm.
So the thing is, they are going to take away the ability to write off the interest on your loan, your mortgage, as a business expense against your Airbnb income or your short-term rental income.
Okay. Yeah.
What do you think of that?
What do I think of that? I think ultimately it's not going to have much effect.
Okay.
I don't think it's going to have that much of an effect on rentability in the market because so now if you rent it out in a 6-month rental or a 1-year rental, you don't get to write off any interest.
Oh, if it's a rental property, like a long-term rental, yeah, you can. Yeah.
So if you're using it as a short-term rental, you don't get to write off the interest.
That's what they're saying now.
Yeah. Does it make a difference?
It might decentivize a little bit the use of it if you want to continue to use it like a short-term rental. The trick now is, how do you claim that property to be a primary residence and use it part-time of the year? Like if you only Airbnb it during like the seasonal months that you get the most amount of money, the highest rates, but then come back and move into it for 6 months.
What if you own a property?
I'm not giving advice on that. This is what I heard that Airbnb is suggesting to do to
because what if you
work
live
within the rules?
Yeah, what if, let's say you live in the main home, and let's say you've got a couple of suites attached to the home which do not have kitchens. And so it's just like
a room or whatever.
Yeah, it's like a bedroom and a bathroom.
Okay.
Maybe there's a living room.
Yeah.
And it's not occupied year round anyway.
In that situation where it would be allowed, and then you would have like one or two bedrooms, not exceeding whatever the city bylaw limit is for primary residence. So then, if it's 20% of your home, let's say that would be 20% of the interest that you can't write off on the home anymore, off of your mortgage loan, right? I don't think that's going to de-incentivize people. I don't think that's going to make a difference at all in that case. But for if they still fall within the rules and take away this incentive, I think there's still going to be money to be made at the end of the day. That so okay, you might not be able to write off as much as before to lower your income. You might pay more taxes from it.
Or maybe you'll find different write-offs.
Talk to your accountant. Don't.
Yeah, we're not giving you tax advice here.
This is a general
we're just
conversation about
throwing
this.
it out there.
Yeah, but I think with this, you could invest your money elsewhere with a better return. If it's a property investor, there might be other options.
Yeah.
So it might get more people to move out of this vehicle for income, and I think that opens the door. This is what the whole point of this discussion is. I think there's opportunity for people to get into the market.
Sure.
Now, before this ban that happened in, what was it, November, they announced it, of 2023.
Yeah.
These would have been at an older appraised assessed value higher than what a normal condo would be, just because they had that allowable use for it.
Yeah.
Now that that's been taken away, investors, people, property owners are looking at getting out of the market right now. And there's some headlines where, it looks ridiculous, where people have now reduced their prices so much that it looks like a steal. And I think that's an opportunity for people to get on that property ladder. Maybe it's a little bit more difficult for long-term living because of the size of the
Sure.
home itself.
Yeah.
Or maybe it doesn't have parking. But I think it's going to give opportunity to people out there.
Yeah, here's the thing. Even if it's a 5% appreciation on the property over, let's say, a couple of years or 3 years.
That's better than renting.
4 or 5. Yeah. And
Right.
you pay down, in theory, you pay down some of the principal.
Yeah.
There's strategies you can use to do that more quickly. But let's say you paid down some of the principal and your property's appreciated 2 to 5%.
Yeah, that's a very conservative amount to say. Yeah,
Sure.
absolutely.
Especially in this market.
And
The point is you have made some progress.
and you have security. You're not a tenant anymore,
Yeah.
possibly.
Yeah.
Right.
Yeah.
So I think it's an option out there. I think in that price bracket, people would complain a little bit like they've been priced out of the market as it's gone up. Well, here's an opportunity. Maybe it's not the Taj Mahal. It's not the perfect home. It's not the dream home. It's not the forever home. It's the home to get you to the next rung in the ladder.
Yep.
That's how I'm looking at it.
Yep.
And I hope people can realize that as well.
Sure.
So, and right now, before interest rates go up and demand, we'll see. The
Interest
waters
rates come
are
down, you mean?
the interest rates come down. Well, we'll see, right? That's what the forecast is.
Yeah.
The waters are pretty muddy still on the short-term rental condos. So we'll see where that lands. Of course, it's hard to predict the bottom to get like the best deal, but if you can get in at some point,
Yeah.
if you're thinking about getting into the real estate market,
Yeah.
build some equity up. I would consider. Yeah, I would consider that right
Yeah.
now. And even if that's used as a rental, that's possible.
Sure.
Right?
Yeah.
As an investment.
Yeah.
A long-term rental, not
Yeah.
short-term rental.
Yeah. Right. Of course.
So I wanted
right.
to leave it on that note.
Okay, yeah, no, it's good. So thank you for joining us. Again, if you haven't, please take a minute, subscribe to the channel. If you have any questions for us, put them in the comments, or if you want to talk to us specifically about maybe your first-time home buyer and you want to talk about your options, feel free to reach out to us. We're happy to help with that as well. And
That's it. Awesome.
that's a
Thank you
wrap.
so much, and we'll catch you in the next
See ya.
video.